Good morning, everyone, and thank you for joining VIZOA's webinar, Strata Operating Budgets. This is something that we used to do as part of a larger workshop for our treasurers, but we decided to break it into a smaller chunk today for a better webinar format. Just as way of introduction, my name is Wendy Wall. I'm the current president of the Vancouver Island Strata Owners Association. And just as a bit of a disclaimer, I just want to mention that everything I say today is my personal comments and positions. I'm an employee of the British Columbia Provincial Government, so none of my comments are to be taken as comments from them or on behalf of them. Just to note, while we're waiting about VIZOA, we're a nonprofit society. We've been going for 47 years here in British Columbia. And we are supported solely from memberships. So thank you to all of you who are members who are joining us today. Your support makes this possible, and we hope to continue doing this for many more years. So today we're going to be covering the basics about an operating budget, what it is, what the Strata Property Act requires, how we would go about preparing a budget. Is there a format that we're supposed to use? How do we know how much to contribute to the contingency reserve fund in our operating budget? What happens when we have a surplus or a deficit? And then just touching on financial reports, we're going to have a whole webinar later on just about financial reports for the operating budget. So this is what the Strata Property Act says about the operating fund. To meet our expenses, the Strata Corporation must establish and the owners must contribute by means of strata fees to an operating fund. And the types of expenses that would go in the operating fund are those that usually occur either once a year or more often than once a year. We're also allowed to budget for the cost of a depreciation report in our operating fund. You can also do it from the CRF, but you're allowed to do it in the operating fund. And then the second part of Section 92 says that we must also establish a contingency reserve fund, and that's for the purpose of expenses that usually occur less often than once a year, or that don't usually occur, like replacing your roof or replacing a boiler. Things like that. Then in terms of the operating budget alone, this is the section of the Strata Property Act that gives us some more details. And it says that we must prepare a budget for the coming fiscal year for approval by a resolution to be passed by a majority vote at each annual general meeting. So read into that. It doesn't matter if you're a strata of 2 units or 200 units. You must prepare a budget and you must pass it at the AGM. So what is a budget? It's basically your plan. It's going to help you plan for the coming fiscal year. Of course, it's going to include what you anticipate your expenditures are going to be for managing your strata. It's also going to specify how much are you putting into the CRF as a strata corporation in the coming year. And then also, obviously, how much you need in strata fees to cover both of those types of expenses. We like to think of the budget as a reference point. We know we can't get it exact because we can't predict exactly what's going to happen next year. But over the course of the fiscal year, it's your best tool to see, how are you spending your money? Where is your position at any point in the year? So what does the Strata Property Act say to help us with this? As you probably know, when we are managing strata, we have to be aware of 4 pieces of legislation, basically. The Strata Property Act, the Strata Property Regulation, which gives more details to different things in the Act, the standard bylaws, if they apply to our strata, and also our own bylaws, which may work in conjunction with the standard bylaws, or they may have completely rewritten and replaced the standard bylaws. So here's what Regulation 6.6 says. It says that our budget has to show the opening balance of the operating fund. Were we in a surplus or deficit coming out of last year? The total contributions that will be going into the operating fund, that's from the strata fees. Estimated income from all other sources. You might have parking, you might have rental of a guest suite, you might have a laundry room. Those types of things all have to be listed and normally separately, so everyone knows exactly where that revenue is coming from. And then for your expenses, obviously you have to list all of your expenses, but they can be by fairly broad categories, and we'll get into that just a little bit. You have to show what you're planning on putting into the CRF this year. And then of course you have to give an estimated balance at the end. Now normally we budget balance budgets, hoping that we'll just break even at the end of the year. I have another quick poll to ask, and this really helps me understand the complexity of the budgets that you're trying to deal with. Now you may not know how to answer these questions, but in some stratas, there are what they call types. So you might have, in your bylaws, you might identify certain types. You might have a condominium type in your strata and then a townhouse type or something like that. So that in some cases, let's say an expense for an elevator might only be paid through strata fees from the people who live in the tower, and the townhouse people might not have to pay those. It gets complex, but it really helps me to know in the audience if you're dealing with those more complex budgets or not. Fantastic. Lots of people answering this one again. Thank you so much. Really helpful. I didn't put it in the poll, but there's also something else called sections, which is different than types. Your bylaws might identify sections by, they're supposed to be by number, section 1, section 2, section 3, that sort of thing. But they are very different types of things in your strata. So you know, section 1 might actually be your commercial strata lot owners. The section 2 might be your residential strata lots. So that sort of gives you a very broad idea of how sections and types would be set up. My goodness, we have 11%. I'm just going to end the poll. Very, very interesting. We actually have 12% of people say that their strata has sections. For now, we're going to touch on a budget that would apply, general principles that would apply to everyone in this webinar. So here's just a very, very simple operating budget. You can imagine that this might be a duplex or a fourplex or a fairly small strata where we've listed the revenue, we've listed the expenses, maybe they only have a little bit of repairs, insurance, and a city utility bill for water. But you can see this is the general principle for everyone. You have your opening balance. In this particular case, the strata didn't have a surplus or deficit to carry forward. We have our total revenue, total expenses, and then separated out, because it's not an operating expense, but we've separated out the contribution to the CRF for this year, and we've shown that it is a closing balance. You could budget for a deficit or a surplus, but that's not particularly useful. So Regulation 6.6 also says that you can't just show how much a strata lot owner pays in strata fees. You have to break it down for them. Each owner under the Act must be shown how much of their strata fee is going towards the operating fund and how much of their strata fee is going to the CRF. So we generally call this a schedule of strata fees. And here's an example where we have a strata full of comedians, which I think would just be so much fun. And we're showing the breakdown. So Bob Hope has a strata fee of $894 every month, but he can see that a portion of it is going to the operating fund and a portion is going to the CRF. You don't have to pay them every month. Some Bearland stratas, for example, might pay their strata fees once a year or twice a year, but this just breaks down the typical monthly. The Strata Property Act does specify how do we calculate Bob Hope's monthly amount or annual amount. This is the formula that's actually in the Act. So when I go back, use my arrows. When I go back here, I've listed the strata lot number, the unit number, and then their unit entitlement. So I'm pretty sure most of you know that you can look at your strata plan or other filing from the Land Titles Office and see your unit entitlement. That's a very important number. It's created when the strata plan is first filed by the owner developer, and that is going to affect you for the life of the strata, and that's how you decide how much everyone's going to pay. I won't get into the complexities of changing that formula, but there are legal ways to change that formula. It takes a unanimous vote of the owners, though. So how do we decide how much to budget when we're starting off planning for our AGM, and we're looking at our year, and we're trying to decide how much we need next year? It's pretty much common sense. So you're going to look at the past 3 or 4 years for your hydro, your property management, that sort of thing. And you're going to be able to forecast, in some cases, a very almost firm number. But for other things, of course, there's wildly different amounts that you might spend from year to year, particularly with repairs. I would always encourage putting in a cushion. Just because you spent $1,200 last year with BC Hydro doesn't mean you should budget $1,200. You might want to think about the fact that it might go up the following spring, 2%, 4%. So build in a cushion. And also just think about the history. If you've just put in a whole bunch of more exterior lights, then that's going to change how much you should budget. Certainly for your contracts, landscaping, elevator, property management, you would normally know or be able to ask your contractor if they're planning on increasing their amount for the coming year. So that's fairly simple to estimate how much those expenses might be next year. One of the things we sometimes forget, particularly in phase stratas, the increase in the demand of services. So if you have decided that you want the gardener to come more often, you're going to have to adjust that, because the previous years aren't going to inform with very much accuracy how much that's going to be. You might also have decided the gardener's coming too often and you want to decrease. So that's something that the entire council should talk about, to remember all of those things that might be affected by those decisions. But some things are difficult to predict. You might budget $500 every year for snow removal and never have to use it, and then boom, suddenly you've got a year where it's $2,000. Just because it doesn't happen every single year doesn't mean that you shouldn't budget for it. It is good to have that money so that you can use it. It is better than being surprised and then trying to find out, scraping together money to be able to pay for the snow removal. The same thing for legal expenses. It's always good to have a little bit there. Who knows if you're going to have to file new bylaws, or if you have a legal question that you need advice about, or maybe someone files a dispute with the CRT and suddenly you need a little bit of legal help. Of course, the big one that we're all having problems with are the increases in insurance. You can't generally get a quote from your agent more than 30 days ahead of time. So you really have to do your best on this one. And in the past, a lot of stratas were just budgeting maybe 10 to 15% increase for the coming year, just in case. Of course, now it can be much more. So in that case, do your best. Talk to your agent. The increases in insurance, as you know, are wildly different. Some increases last year were, say, 20%. In the news, we've seen them go as high as 780%. So there is almost no way that you can possibly predict, but I would certainly say budget more than what you paid this year. The other big one is damage due to things like water leaks. We can't predict. There's going to be some years where you have 4 water events, another year where you have 1. You do your best, but that's where the cushion comes in. You have to allow yourself some wiggle room there. So when you're budgeting for repairs, this is probably one of the toughest things to budget for. And I go back to that part of the Strata Property Act that defines what goes in the operating fund as opposed to the CRF. So sometimes you're going to want to remind yourself of this throughout the year. For common expenses, which usually occur either once a year or more often than once a year. So I often get asked, well, this particular pipe maybe breaks every 20 years. Does that mean it's a CRF expense? No, not normally, because every year you're going to allow some expenses for repair and maintenance. And some of that will go to plumbing or electrical or other types of repairs. It's okay to have broad categories to capture these types of things. If you were going to replace the piping on the 4th floor for all owners, and that's different. But if you're just doing repairs as they come across, you've got a pinhole leak here, or you need some outlets, some electrical work, you've got a breaker on the panel that needs to be replaced. Those can all be in common expenses, even though those little things might not come up on that particular panel or that particular pipe, more than once a year. So that's where I was talking about the broad expenses for categories. Some stratas get very specific. They'll say, well, this is how much we want to allow for electrical, for plumbing, for pest control, and they break it down into such fine categories that you'll find that it's difficult to stay within those budget lines. So broader categories work if you're in a fairly simple strata. Something like repairs and maintenance is perfectly fine. You don't have to break it down further. Some break it down a little bit. They'll say, well, here's how much we want for repairs and maintenance, but then we want a separate budget for repairs and maintenance for exterior things like gutters, roof maintenance. You might have another one for the gardeners and landscaping, but it might capture everything. It might capture the contractor's cost, the cost of plants and mulch, and it might include anything to do with irrigation. So it kind of gives you an idea of how you can create broad categories that are still specific enough for the owners to know where that money's being spent, but it gives council a little bit of wiggle room for the different types of expenses that might come up in that category that might be a little bit different year to year. The other thing is, if you've had a change in your insurance in the last year or so, you will notice likely that your insurance deductibles are now higher. If you used to have a water deductible of $5,000, if you had an event where repairs needed to be done that cost $7,000, you might have made a claim for that. If your deductible is now $25,000, you have to be prepared for all of those water leak events or other types of insurance events where it's below the $25,000 deductible, and now you've got to do those repairs. You can't always dip into the CRF for those things. So, and we won't get into the nitty-gritty of that, but the point is that you might need to have more in your repair and maintenance annual budget to cover those repairs that you can't make a claim for. As far as the format for the budget, people often ask, do we have to use Quicken or QuickBooks, or do we have to use Sage, which used to be Simply Accounting? Is there a form that the government provides for us to set up our budget? The answer is no. And I think part of that was to give us the flexibility of using tools and programs, if we want them, that meet the complexity of our strata. If you're in a small strata, you might find that your budget is so simple, it's a few lines on an Excel sheet. So why would you want to have to use a professional accounting program for that? So keep it simple. The most important thing is that your owners understand the budget, and it's very transparent. So in terms of your format, here again is another sample of an operating budget. And again, you can see it's very simple. This one has a few more lines of categories than we looked at before. But again, any owner who reads this should be able to understand, here's the total revenue, here are expenses, here's how much is going into the CRF. And this style is all you need to meet the requirements of the Strata Property Act. But you absolutely can have more complex programs if you like. Here's one that's got more information, and I actually like having a little bit more information. Here is our past year, and then on the far right, we're looking at Strata. Now, this would have been last year's AGM for them, but this is what the Strata was proposing for the 2019-20 budget. So we can see last year, for example, that for water sewer, they budgeted $36,000, but their actual cost at the end of the year was just over $37,000. And so what are they going to do in their proposed budget to owners? They're going to put $38,000. They've just put a little bit of a cushion there to help them, and so on and so on. So you might want to not just look at the previous year's actual expenditures. You might want to look at the expenditures for the last 3 to 4 years, because then you can see the ups and downs, particularly in things like repairs and maintenance. One of the questions that VIZOA gets asked a lot is, how much should we be putting into the CRF? A certain percentage, a certain amount. This is what the Strata Property Act says about the minimum contribution to the CRF. It says, and this is under Regulation 6.1, it says if a CRF balance at the end of the last fiscal year is less than 25% of the total budgeted contribution to your operating fund that year, your contribution to the CRF in the current year must be at least the lesser of 10% of the budgeted contribution for this year, or the amount required to bring the CRF to the 25%. We're going to look at an example because that's quite a long sentence. Is there a maximum contribution? No. The only guidelines we have in the Act right now about a maximum contribution would be that you can put in as much as you want. Once you've reached that 25% level, you can put in as much as you want after consideration of the depreciation report. So basically, they're just saying, we want to give you the flexibility. Some stratas want their CRF to be fully funded so that you can always have enough in the CRF for your future projects. But other stratas are okay with having special assessments from time to time. They, for whatever reason, the will of the owners is to not have to put as much into the CRF. Both are fine. It really depends on your owners and how they want to deal with their future projects or insurance. Well, we'll talk about insurance a little bit later, but you know, those times when you might have to go into the CRF when you didn't expect to have to. So here's an example of how would you know what your minimum CRF level should be. So this is a little bit of a crazy slide, but let's imagine at the end of the 2018-19 fiscal year, I don't know if you can see my mouse, but let's say the CRF balance is 15,000 and this strata is thinking, well, what's it supposed to be? It's supposed to be 25% of your operating expenses. So when we look at their operating expenses for that year, we see that their total expenses were 178,000. Now these are the operating expenses before the contribution to the CRF. So if we come down here to the bottom and we look at 178,000, well, what is 25% of that? Oh, just over 44,000. That is the minimum that they're supposed to have in their CRF. But hey, now they only have 15,000. So what do? They look at their proposed budget for this year, which has total expenses of 194,000, and they calculate what is 25% of 194,000. Well, that comes out to be over 48,000. So they need to have 48,000. but they only have 15,000. So they've got to make it up. So they have a couple of choices. They can do it all at once. If you want, you can bite the bullet and say, yep, we're going to put in $33,500 this year in our proposed budget and hope that the owners approve it. Or that can be a big bite to swallow, depending on the size of your strata and how much needs to be made up. What we read earlier, that big long sentence, basically said, or you can put this amount in, or you can put at least 10% of this year's operating budget. So if the total expenses in this coming budget are 194,000, then you have to put in, the minimum is 10% of that, which is 19,400. You're still going to have to make it up to eventually get to this approximately 48,000. Might go up, that requirement might go up a little bit every year because you're constantly having higher total expenses, or so it seems. You'd have to do that again the following year, et cetera, until you reach your minimum. So I hope that slide doesn't, I hope it illustrates what we're trying to get to there. The reality is that 25% of our operating expenses is a small amount of money. And if you look at your depreciation report, it would be a pitifully low amount. So in reality, most of us with our depreciation reports are being guided to have a much higher minimum in our CRF funds than what that 25% requirement is. But it's just good to know for those times when we dip below. So the next thing we're going to look at is what happens if you have, at the end of your fiscal year, what happens if you have a surplus, what happens if you have a deficit. So if you have a surplus, this is a fairly straightforward part of the Strata Property Act. The council, not the strata owners, but the council can make a three choices if they want to. They can transfer that CRF, that balance, that surplus into the CRF. They can carry it forward as an operating surplus without reducing fees, or you can carry it forward to next year's budget and use it to reduce strata fees. I'm not going to get into each one. I think the important thing to note here is that council can make this decision. Now, is it a good idea for council to make this decision? Depending on the politics of your strata, because this affects strata fees, it is common for stratas to actually make this a majority vote resolution at the AGM to say, you know, approve or deny that we can transfer this lump of money to the CRF. Some stratas might, if you have a large surplus, you might want to do both. You might want to say, well, we want to move X number of thousands to the CRF, but then we want to use this much to help reduce fees. There are pros and cons to using your surplus towards next year's fees. It might seem nice for your strata fees to stay the same or go down, but what happens the following year? You've actually created a situation where when you don't have a surplus to put against fees, your fees are going to appear to jump up much higher because you've basically skipped a year in what would be the costs of living expenses. So I caution that it kind of creates a false economy for owners, and it can be quite a shock in future years to see their strata fees go up because they were kind of relying on this surplus. The other thing, if there's anything other than these three choices that you want to use the CRF, or sorry, that you want to use the surplus for, then it would require a 3/4 vote of the owners at a general meeting because it's outside the scope of those three choices that are in section 105 of the Act. Now, if there's a deficit, you have to deal with it right away. So if there's a deficit, you must, in your next proposed budget, eliminate it. So you have to be putting in, for example, more in strata fees to cover that deficit plus all of the current year's expenses. Or you could have a special levy to raise money for that, to cover that deficit, or you could split it up as you like between the two. But no matter what you do, you have to deal with that deficit in the next fiscal year completely. You can't spread it over the years, unless you plan your new budget to also have a deficit. But it is a new budget. It's basically eliminating the old deficit. And if you were planning, it would be a planned new deficit that would then have to be dealt with the following year, and so on and so on. You would just be kicking it down the road. So it's probably not a great idea. The next thing, of course, is you've had your year on council. You've been working on your annual budget that you're proposing to the owners, and now, of course, you have to get it approved. So normally the treasurer would draft the budget and present it to council. They must present it to council, and the decision for that budget is a council decision. The decision to propose a budget. So it really, don't put it all on the treasurer's shoulders. It is council that is responsible for deciding what is the proposed budget going into this AGM. And you'll want to discuss all of those factors that we talked about: changes in contracts, increases in your contractors are charging you, all of those things. And then what the Act says under Section 103 is that the proposed budget must be distributed with the notice of the AGM, and that's the notice of the AGM is covered under Section 45, and must be accompanied by a financial statement. So you can't just put out your agenda for your notice of the AGM. You also have to include this proposed budget and the financial statement, and there are more details about that as well. However, we're sticking mostly to discussion about the budget today. So the budget for the coming fiscal year must be passed by a majority vote at each annual general meeting. Section 103 says the proposed budget may be amended by a majority vote at the AGM before the budget itself is put to a vote. So what does that mean? It means that if you have an owner, they can make an amendment from the floor, just like amendments to other resolutions. And somebody might say, well, I want the gardener to come more often this year, so I want to make an amendment that we increase the line for gardening from 10,000 to 12,000. Now, if there's a seconder for that amendment, then that amendment would go to a vote, and the amendment might pass or fail, and so on and so on. If people aren't happy with the proposed budget, you might have multiple proposed amendments to different budget lines. And then at the end, some of those amendments might have passed, some of them might have failed, but for the ones that passed, you'd then be saying to the owners, okay, now we're going to have a final vote to pass the budget as amended. And then that vote might pass or fail. So you can see that the owners have a chance to have some input here. And you can also see that the budget that is passed might be quite different than the budget that was proposed in the notice package, and it might affect the fees. A common thing that is amended or attempted to be amended from the floor is the contribution to the CRF. So if someone makes an amendment to increase the contribution to the CRF by 50,000 and it passes, and then the budget passes, strata fees are going to increase. So then you'd have to recalculate strata fees after the AGM. So just remember that, because the budget that's proposed could be different by the end of the AGM. It's also good to know that the budget cannot be amended during the year. So for example, let's say you get that big insurance bill mid-year. You can't just go back to an SGM and call an SGM and change the budget. You have to deal with it in a different way. So that's really important, and that's why planning your budget wisely at the beginning is so important. Now, the changes to the strata fees, within 2 weeks after a budget is passed at an AGM, you have to inform owners of any changes in their strata fees. It's a nice policy to inform them of their strata fees anyway, even if the strata fees stayed exactly the same. It's nice to let them know. It's just good communication, but technically speaking, you only have to inform them of a change to their strata fees. I'm just going to quickly mention staying up to date. It has been a really busy year with changes to legislation and to regulations for strata property owners. Bill 14 was a very large bill. It was called the Municipal Affairs and Housing Statutes Amendment Act, and it was passed in August 2020. One of the things that happened in that piece of legislation is that it opened the door to make it easier to make regulations on a wide number of areas of the Strata Property Act. And the beauty of that is it's much easier to create new regulations than it is to pass changes to the actual Strata Property Act. So what we are likely going to see in the next year is a number of new regulations come down the pike, and they could be, we don't know what they are, but they could be very good. It could be very helpful. Just keep an eye out. We do keep the resources section of our website up to date to let you know about these things. And if you're on our newsletter mailing list, the email list, we'll let you know of some of these changes as well. We've got just 15 minutes left. I'm going to touch very briefly on financial reports, and I'm pretty much sticking to the during the year type reports. We often get asked if there's a particular accounting method. If any of you have done books before, there's a cash accounting method and accrual method. Doesn't matter which one you use. Both of them are correct. Use what's best for your strata, especially if you're a self-managed strata. You probably find that the cash accounting method is the easiest. What is the most important part is that you're transparent with your owners, that it conform with the Strata Property Act, that you're accurate, that you're complete, that everybody understands what your reports mean, that you're communicating with your owners. These are the things that are going to make you successful with your reporting. But does the Strata Property Act require that you have monthly financial reports? It does not. It actually only requires you to have a financial report in the AGM. So that's very interesting. Depending on the size of your strata, unless you're something like a duplex where your only cost for the whole year is insurance and the contribution to CRF, monthly reports are, to me, the best management tool that you can have, particularly the first one, the income statement, which we also call the budget comparison, because what it's going to do is it's going to look at everything that you did, everything happened this month. You're going to see in your budget categories, you're going to be able to compare. You don't want to spend all of your gardening budget in the first 6 months. And when you look at your monthly report, or you could do it every 2 months, or you could do it every quarter, when you look at those reports during the year, it's going to let you know where you're at, how much money do you have left, how much more do you expect that you're going to need for the rest of the year. So it just kind of keeps you on track. A couple of examples of monthly reports. Again, these can be in a format that you're comfortable with. There's no set format. But basically, I've got 2 examples here. I find the next one a little bit easier to read. You've got your current month. If you're in month 3, then most of your expenses should be at the 25% level. You've got how much you spent year to date, what your annual budget is. And then if I eyeball the percentage year to date, I can see that most things are around the 25% level of what I've spent, what we have spent so far this year. And if you look at a couple of things, it's okay for some things to be higher or lower. For example, in this case, the fire and safety budget has 63% has already been spent at month 3. That's okay. They only come once or twice a year. So obviously there was perhaps your annual inspection of your smoke alarms. There was a big bill. You've already spent a big chunk of that money, but you're not actually expecting very much in the next 9 months of any other expenses. So that's okay. So when you're reviewing those reports, it suggests that you look for a couple of things. Has everything been properly recorded? if it's an expense for waste removal and recycling, you don't want it to be in office expenses. It will skew all of your numbers and make it more difficult for people to compare your actual expenses from year to year. We just talked about, is the percentage of the annual budget that we spent, is that in line with the month of your fiscal year that you're in? Were there any big deviations? Were there any major expenses that you came across so far this year that weren't contemplated? If you didn't budget for snow removal and you had some big snowfalls, then that would be what I'm talking about here. Were there any unexpected price increases? You forgot perhaps to check with your elevator company to see if there was going to be an increase, and perhaps it jumped up. Are you going to have to trim back on certain things for the rest of the year so that you don't run out of money? Are there any major expenses that you haven't paid yet? Your monthly position is not going to be accurate if you know that you haven't paid the water sewer bill to the city this past month because maybe you didn't have enough cash flow to pay it. Well, that's really good to know because it's not reflected in your reports yet. Has anybody in your strata, are they in arrears, or do you have several owners in arrears? In a small strata, this can be a real problem because it very greatly affects your cash flow. So if it's causing a cash shortage, you're going to want to keep on top of those things. And after 3 or 4 months, you might even want to consider putting a lien on the property. Don't let them go too long. You only have 2 years to collect on late strata fees. After that, they go poof, and you can't take legal action anymore. So in some cases, if you're having a cash shortage, you could take a loan from the CRF into the operating fund. The part of the Act that gives you the permission to do this is Section 95. It says that you can lend money to the operating fund. But you can only do it to cover a temporary shortage, and it must be repaid by the end of the fiscal year. So you're just moving money in for a couple months to pay. Maybe you've got hit by a whole bunch of gas bills because it's winter. You've got to put that money back in the CRF. You also have to let the owners know that you're doing this. Complete transparency when it comes to CRF money is really important. And then, as I said, you have to do financial statements for the AGM, even though you don't have to do them monthly. And the part of the Act that tells us about this is Section 103. The financial statements must be presented at the AGM, and as I said earlier, they have to be in the notice package. And what it says is the financial statements have to be reporting the amounts within 2 months before your AGM. So let's say that your AGM is October 30th and your fiscal year end was August 30th, but you only have books that go up to September 30th. That's okay because your books are showing some financials that are within 2 months of the AGM, before the AGM. But if your fiscal year end is August 31st or 30th, and you only showed them reports up to the end of September, then you must, within 8 weeks after that fiscal year end, at the end of August, you must update your financials and get them to owners within 8 weeks, so approximately 2 months from the end of your fiscal year. So that means that before the end of October, you have to have updated those financial statements and provided them to owners to show them everything that happened to the end of August. I don't think I gave a very good example of the months, I'm sorry. But I'm not going to go back and correct myself at this point. You'll be bored. So Regulation 6.7 gives us more information about the details of what has to be in that financial statement, the opening balance of the operating fund, details of our income, details of our expenses, and the closing balance. It's easiest just to use the format of your budget as we looked at what you actually spent versus what you actually budgeted for. And here are some resources for you. And while we're looking at this page, I'm just going to launch a little poll to find out how the webinar was for you today, because we're just wrapping up. But do visit our website, because on this on our website you'll see that we have our resources page, and it includes links. There's dozens and dozens of links there, so that's one of the easiest ways. I go there almost every day to click on the link to get to the Strata Property Act, the standard bylaws. It also has a link to a number of government sites that are very useful. If any of you have been members of VIZOA, you know that every quarter we issue a bulletin. It's full of articles, so you can see bulletins for, I think it's about 12 years on our website. You can go back and read articles over that period of time. We also have publications. So if you're a treasurer, there's a few that you might be interested in. Best practices for Strata treasurers is one of them. Another one is management of the contingency reserve fund, et cetera, et cetera. So those are available online digitally. And then if you're a member of VIZOA, we also have the Strata support team. So you can submit questions to them as well. And thank you to everyone who's doing the poll. I'm going to stop recording at this point, and thank you all for joining, but I am going to stay on for questions.